Welcome back to the next episode of What's Your One More. I'm your host, Quinton Harris. You're dialed in for, what we usually call our lending update, but at this point, it's more of just like a breakdown / update. And I'm back with my standing co-host, Daniel Halvorsen. Thanks for joining me today.
Yeah, man. Good to be here.
It's always great having you on the show, man. And I got to say, to kick this thing off, guys, we're going to hit you with a ton of stuff. And hey, at the end of this month, we're talking Fed talk. Things are going to happen. It's amazing. It's all starting to come together. And I can say with a clear conscience now that you guys are going to see a rate cut in the next one of the two meetings here. We're going to dive into that, what that means and what you're seeing. But this stuff that we're bringing today, I mean, the amount of time that you put into this, basically update we're going to talk about, but also a lot of the charts, a lot of the mortgage cheats that you're going to talk about in here, as well as a lot of the job data and Fannie Mae, Freddie Mac data. It's incredible. So thanks for doing that. I appreciate it. And if you're listening to this, guys, this is stuff you're not going to find online. This is stuff that took time and effort. More importantly, some of these things we pay to get that you guys don't have access to, and some of our partners have passed it along as well. It's really cool. So Daniel, thanks for taking the time, and really appreciate this today.
Yeah, I mean, you could probably find it all on the internet, but I've put it all together for you in one spot. So,
well, there's some of this stuff I know for a fact you can't find on the internet we're going to talk about today, that there's nothing you Google that's going to get you these answers here. So let's jump into it. So, hey, let's just do a quick recap. Last really 10 episodes I've put together here, I've been fighting the battle of a housing crash versus 2008. We got some data on that we're going to talk about again. I've been fighting people on, why homes are inflated. I've been fighting people on why they don't want to buy a home. And it's like, guys, hey, quit fighting it, quit resisting it, because at the end of the day, the market is not going the direction that a lot of these doom gloomers online want to talk about. And some of these people online, they're just trolls, man. They're just telling people bad information. And unfortunately, if you don't own a home, you're buying into this nonsense. And it's it's not even disappointing. It's disheartening. I feel bad for the people that listen to this trash online. So if you're listening today and you like what you're hearing, and we're going to bring facts over fear today is what you're going to get. Share this with someone that's living in that world of fear that doesn't know what the hell's going on. Share it by sharing the podcast. Go to our YouTube channel at What's Your One More. All the graphs, all the charts, everything we're about to talk about is going to be on there. So if you're listening to this on the audio side of things, you want to see some of the visuals that we're doing, jump over to YouTube, subscribe. You'll get a chance to take a look at that. So, hey, let's talk about, kick it off. Fannie Mae comes out with a sentiment. And the sentiment is usually a consumer survey of some sort that talks about, hey, listen, how are you feeling about the market? Are you trying to be a home buyer? Are you not trying to be a home buyer? Something that stood out to me on this was the amount of people. I think they said 90% of the people in this survey, they were unsure of what their down payment needed to be, to the tune of they thought they had to have somewhere between 15 and 20%. They were unaware that 5% or less was even an option. That kind of blows my mind thinking about all the propaganda that's out there about mortgages right now.
Yeah, and there's two different surveys in here. This one was just a survey that explored consumer understanding of the mortgage process. But one of the big takeaways in there is, yes, 90% of people either grossly overestimated or just didn't know what the minimum down payment requirement would be for a mortgage.
How can that happen?
Yeah, I mean,
are these people living under a rock? I mean, what's going on here? I mean, or are they is it just the consumer is that far off right now?
Well, it's probably difficult for us to answer because we live in this world all the time.
Fair enough.
So for us, it's well, how could you possibly not know that? But
right. Okay. Fair enough.
I think a lot of people just don't educate themselves in any capacity, right? They just have this notion of this is what it takes. And if they're talking to, a parent or a grandparent, they may have been living in a world where that was the norm, right?
Yeah, 20% down or more.
If you're getting a lot of your news from social media, Instagram, TikTok, I mean, you're probably not following mortgage people. You're probably following somebody that, throws a ball 300 yards or something and, funny memes. So I think a lot of people are just maybe not getting, they're not following the resources that would be giving you information like this.
Well, I get that. For context, I asked my kids the other day, because I saw the sentiment, we were talking. I was like, hey, what do you think you get to put down for a home? Now, keep in mind, they're 16 and 17, and they live in that world you just described. They're 50%. And I'm like, so you think the person that has this $500,000 home put $250,000, they just have that chilling on the sidelines and throw down in there. And my son was like, so my daughter answered first, and my son was like, yeah, that's ridiculous, 25%. And I'm like, dude, what? So I guess I could kind of see it, but I'm assuming they're surveying people over the age of 18 in this case, right? They're definitely not diving into it. But to your point, you don't know what you don't know. And I think this is one of the things that we're trying to get out there with this podcast. The whole premise of why we do these things is to educate people. That's why we need people sharing this. We need people to help. We're not looking to get sales out of this. We're doing this to help educate our audience here. And so there were some other things in this survey that stood out. That was the eye-popping one there. But the other one was people that think the homes are not price favorable or it's not a good time to buy, but yet want to buy a home. I thought there was a pretty big distinguishing difference between those two things.
Yeah, so Fannie Mae's Home Purchase Sentiment Index, which they do monthly, they survey 3,000 consumers. And basically 19% of them said it's a good time to buy a home, which is actually up from the previous month. So, good little news on interest rates. And now 19% of people think it's a good time to buy a house. But yeah, it's kind of interesting that 19% said, yeah, it's a good time to buy, or it's not, it's a good time. So 81% said it's not a good time to buy.
Right.
But in the other survey that we just mentioned, basically 92% said that owning a home is important to them, and 74% said they're planning to buy on their next move, which presumably would mean in the next 12 months if they're renters.
Right. So think about that. So 92% of the people say it's at the top of my financial priorities, but then 81% go, but it's not a good time to buy. So my priority is way down on the totem pole, but yet in the next 12 months, it's 72% of what I'm thinking about.
Yeah. And I think we've all set goals and things we want to do and then not accomplish them because we didn't take any action, right? I think a lot of those people are the same people that say that, and then next year when their lease expires, they don't even really try to buy a home and they just say, it's not a good time. We'll rent,
So what does that tell you when there's that kind of disparity there between those two types of surveys? I mean, something kind of jumps off the page to me, but what do you think when you see that?
Well, I think that, some of it is probably misinformation, I think.
100%.
I think that a lot of people, just the old adage of what goes up must come down, which is something that I think is more of a stock market mindset, right? You see these big run-ups in the stock market, then you see a pullback. So I think that if you're somebody that's renting that hasn't bought a home yet, maybe you're thinking, okay, well, we know prices went crazy in 2020 and 21. They actually, even before that, were going up rather significantly. And they've continued to go up. And so they're just thinking, okay, at some point they've gone up, they're going to come down, right? Whether or not, whether that's true or not, which we could be here all day explaining why there's really no reason to think that's going to happen. But I also think people don't realize if prices come down, how much they would have to come down to even get back to, 2021 levels or 2020 levels. I mean, there'd be a disastrous pricing correction, which wouldn't even be feasible. So I think that, I think a lot of it's misinformation. You can point to that Fannie Mae Home Purchase Sentiment Index for that as well. I thought one thing that really jumped off the page for me was that greater shares of consumers thought that both mortgage rates and home prices would rise over the next 12 months, which is why they don't think it's a good time to buy. And, I would be aligned with them in that home prices will go up, although price growth is moderated. I would still agree that those will go up. But, if you're following what's going on in the economy right now, I don't think there's any debating that we're in the top end of the range of where interest rates are going to live in the near future. So to think that, if both of those are going to go up, okay, well, maybe for a lot of people, they wouldn't be able to afford it, right?
Right.
But if interest rates come down, that's the greatest, that's the fastest way to improve affordability. So interest rates more than likely over the next 12 months are coming down. So would be curious to know if people understood that, what that percentage of people thinking it's a good time to buy a home, would that change their opinion on that, right?
Yeah.
And where are they getting the information that interest rates are going to go up over the next 12
there
months?
There you go. That's the question I want to go. Where are they getting information? I'll tell you where. They're getting it from these doom trolls online, Daniel, that they have no pedigree. Their experience is limited at best. But what they're really experienced at is misinformation. And listen, I'll call it what it is, man. There's a guy online over here, Reventure, right? He's got a lot of followers. He's crushing it on YouTube, right? But this dude has been predicting a real estate crash. You ready for this? Since 2020 of December. Hey, dude, you might want to focus on sports or something else, but it ain't working in real estate right now. You are so far off. But the thing is, this dude, a lot of subscribers, millions of views, people are buying into that misinformation, right? And, I know you did an incredible breakdown, which we're going to do on the next episode of our update of what it takes for a crash to happen and where we are with those same metrics, right? someone like this would never want to be live on our show because you and I would destroy someone like that, right? Because we have charts, we have data, we have facts over fear. This person would rather record something and create this nonsense that people want to buy into. It's not real, right? It's absolutely not real. And so for you and I, this is something we're super passionate about, and we get it. But it's going to take rates going up significantly further. It's going to take more supply to basically create and fill the demand that's there. And as you'll see in mortgage applications, which we'll talk about, those are up. They've been up 11 of the last 14 weeks on purchases in particular. Like, the demand is there. People want to buy. And to your point, hey, listen, rates drop. All of a sudden, this sentiment changes dramatically, and we're in a different ballgame, right? 100%. Much different than what old Reventure over here wants people to believe, right?
He may not have said when the crash was going to happen. So,
bro, it's been 5 years running.
2042, he might have his
It's
day.
one of those things, Dan. If I look at you long enough and I go, hey, Dan, you're going to die. You're going to die. You're going to die. I keep on this track. I'm going to be right eventually, right? And so the thing is, it's like, and some people argue, oh, they do the same thing with interest rates. Yeah, but we actually have facts supporting why our predictions had to be altered and changed. But we've also said, hey, listen, we're going to back up and repunt, and we're giving you dates when we think this is happening. Someone just forecasting doom and gloom. I mean, give me a break, right? That's ridiculous. So again, Reventure, you have a standing invitation to be on this show whenever you want to. Just join on in. We'd love to have you.
Well, I think probably, as we lead into kind of the next area that you want to go, a couple other things from this study. One, from this same study, basically less than half of consumers feel confident going through the mortgage process, including the people that want to buy in the next 3 years.
Of course. And
they also cited that mortgage lenders and real estate professionals were the most trusted resources of information, and 68% of consumers said they would be at least somewhat confident speaking with a lender. Mm-hmm. So the question is, why are those people not speaking with a lender?
Right.
But, maybe that's why they would, maybe that's, I don't know how 68% would want to speak to a lender, but then less than half feel confident going through the mortgage process. It's kind of one of those things. It's like, I think a lot of that's just fear of the unknown more than anything. But it really speaks to, I think, the people that are having success in the current market, real estate agents, loan officers in a challenging market, probably the same people that are putting out that information and becoming a trusted resource in a time where there's a lot of misinformation, and that's kind of just the world we live in at this point. But that was my big takeaway: is, hey, the people that are having success are probably the ones that are figuring out how to become trusted resources, right?
Yeah, no doubt. And it brings me back to this conversation I had. We were at a restaurant, and myself and a colleague were having this spirited debate about the exact topic we're talking about right now. And the waitress heard us have this conversation and kind of bumped us. Hey, can I ask you a question? I explained what we did. She was like, sure. I said, hey, I'm imagining you're somewhere between the age of 23 and 28. And she was like, yeah, right there. You got me. And I said, cool. I said, can I ask you a couple of questions? Number one, hey, do you think real estate's going to go up or is it going to crash? And her response, of course, was, well, I mean, it's got to go down, right? And I thought that was interesting because, logic then told me, like, okay, I'm wondering why here. Do you own a home? And she was like, no, I don't. And I was like, well, my follow-up and final question is, like, do you think this guy sitting next to me who owns a home feels the same way about you that doesn't own a home? And she was like, is this more of a psychological test, or is this a question? I was like, no, you're helping the debate here. But my point was this, is that if you own a home, you don't believe this nonsense, right? No one wishes it. But if you don't own a home, it's almost like that's all you got to hold on to, right? There's no hope. So the hope is it's going to crash. But that's, again, misinformation. And it's really not an educated platform to live by. And that's why I love what we're doing on this podcast, is that we're bringing facts over fear. Because hoping a market's going to crash, I mean, hope is not a strategy.
Sure.
Never going to work for you, right?
100%.
So as we get into this here, but I led into a conversation I had with her. I was like, what's holding you back? Home prices and down payment. Man, if you live in the state of Florida, is there a solution for that down payment right now? Right. And you talked about it in the last one, and now it's in full effect. And, we're funding these, right? We're funding these. And if you live in the state of Florida and you're interested in what Daniel's about to talk about, we're going to have a link on the YouTube channel. Just click on it. We'd love to help you out with this. We can get you in touch with the right person. But we're talking almost $35,000 worth of free money right now, and lots of opportunities with very favorable rates.
Yeah. I mean, we've talked about Hometown Heroes a bunch for good reason. It's something that it's a great program. A lot of people are taking advantage of that to get into a home. We talked about July 1, they'd release $100 million. I finished this update on, I think, the 16th, and $36 million of it had already been utilized 16 days in.
Meaning it's been reserved.
Correct. Yes.
Yeah.
So
These are people that have been sitting on the sidelines waiting for this product, saying, hey, listen, put me in, coach. I'm ready to play July 1st. Let's reserve. Let's go. Let's fund, right? That's what's – and knowing this product's been coming for 60 days, that doesn't surprise me.
Sure.
At all.
Well, it just shows you the demand in the market right now where there's opportunity, right?
Great point, Daniel.
To have 35% of the funding gone in 2 weeks. And, some of that may not close. It'll trickle through. So it's not, it's not like we won't keep that same pace.
Right. Because that's pent-up demand
as we move forward,
right?
In my
pent-up
opinion.
demand, for sure.
But, we've got people that been searching for a home, couldn't make it work. Some of these other down payment assistance programs, the rates were higher than they wanted, or maybe they couldn't get enough assistance. They couldn't get closing cost assistance. And now with this program and the additional money they're able to get, basically being able to secure that funding, purchase a home with very little to no money out of pocket. We had another loan officer in our office had been working with a client for 3 years, and she called them about this program, and they jumped on it and purchased a home. They're going to be closing here very soon if they haven't already. So
why would someone be working on a home for 3 years? I mean, when someone hears that, they're like, 3. I mean, come on, tell someone why someone would be working. It could be credit challenges. It could be down payment challenges. It could just be finding the right home and then getting locked into a rental agreement. All kinds of things. But what's the main resource?
Yeah, I think it's timing, right? Somebody, a lot of people reach out. They want to buy a home. Maybe their expectations don't match reality in terms of payments or how much they can afford, and then they rent, and then they try again. So it's not, it's probably not 3 years of talking to this person every week.
Because it'd be like 3 years ago, 2021, where the interest rates were really low, right? So there had to be something else there. And I often wonder, is this the person that's like, I'm not going to pay this at the peak. I'm not going to buy this home at a peak. And they wait for this market crash because they're listening to this nonsense on YouTube channel from that guy about market crash. It didn't crash. It went up 20%. And then, oh God, it went up another 8%. It's like, at this point, turn that channel. Like, we need to turn that off completely, folks. All that doom and gloom stuff, because this person missed out on 43% of appreciation, and now is looking at higher home prices with higher interest rates, unfortunately.
Yeah. I mean, if that person had bought 3 years ago, they would certainly be a lot happier with that decision.
What a great example.
If they look 5 years down the road, they're going to be a lot happier with this decision than they would be if they were in the same situation and not owning a home 5 years from now. So real estate is one of those things where you got to look at. It's a long play. Prices are going to go up, generally not as quickly as they have been, but you purchase a home now, more than likely 5 years from now, you're going to be in a much better position than you are today. So.
Oh, dude, 100%. And I also think this is a person that kind of talks in that sentiment where you were going earlier, like, hey, listen, I want to learn about buying a home, but I may not want to get with the mortgage professional right away. I may be intimidated by the process, whatever it may be. But you're starting to see that with these first-time home buyers. There is some intimidation there because of that misinformation that kind of delays the process. And at the end of the day, it delays your success. Like, that's the worst part of this. And when you hear these kind of examples over and over again. And so one of the things that I think you've put together here that helps with that, you kind of put together like this cheat sheet for people, whether you want to work with Daniel and his team or you want to work with someone else. This cheat sheet's a universal cheat sheet, correct?
Yes.
And it's going to be on the YouTube channel. There's going to be a link. You can download it. Great stuff you put on here. You want to talk a little bit about it, some stuff that may help some of these people out that are looking to buy a home right now.
Yeah, I mean, we talked about being a trusted resource. We share this a lot with our real estate partners, but essentially what it is, it's a guide of just basic bullet points about pretty much every type of loan. We're covering 95+% of loans that are done. It's a 2-page document, and it just has a little bit of information about different programs, and then also, if you're making an offer, depending on what loan type, how much you could try to ask for in concessions from a seller. So kind of something that we started out with might be a useful tool for our real estate partners to have handy so that they can answer basic questions and, be that trusted resource and not necessarily have to defer everything to a lender if it's a very simple question, right? But it's also a great thing. I mean, if you're a consumer, this document wouldn't be confusing to you. It's something that could be helpful just to understand different loan products and kind of give you a pretty good idea of based on your parameters and where you are, maybe what loan options would be available to you.
Yeah. Another thing is this. Hey, let me put another, box around this cheat sheet, if you may. If you're listening to this and you're like, oh, I'm a first-time home buyer and they're talking to me, but if you tune me out on that, tune back into this. Hey, if you're a parent and you have a child between the ages of 17 and let's say 20, right? The national average first-time home buyer is 33. 33 for a reason, but I mean, it doesn't necessarily have to be 33. This is the cheat sheet for you to start learning how to build wealth for your children at those younger ages when they want to start buying a home, because there are specific products. You just talked about one that particular age group can take advantage of with mom and dad as a co-signer. Guys, there are lots of opportunities with this. And if you want to help your children learn about real estate and build wealth through real estate, this is the start. This is the guys. This is where it takes place. So download that cheat sheet, learn about it. And hey, if you have questions, hit us up. That's where we want to help. We want to help you learn how to start having these conversations early and often, so you're not 33, 34 years old buying that home behind the game when you could have already had 10 years of wealth building taking advantage right there.
Sure.
Yeah. So, hey, there's some other things in here. So I love this. You got some insider content. If you like what we're hearing, right, and you're like, I want more of it, I want a deeper dive of it, you got a way to do that with your inside information, insider, where you can sign up and get more content like this.
Yeah, it's kind of a new campaign that we've rolled out, and it's really focused on market trends, seasonality of real estate, debunking some myths, and really kind of specific knowledge outside of what the general consumer wants to know. And there'll be basic things as well, but I think it's something that whether you're a real estate agent or anybody in the real estate industry, or a consumer that has maybe bought homes before or thinking about buying or selling, just going to be kind of some helpful information to kind of, peel back the curtain of what's really going on with the market, and maybe give you some higher level data than what you could get if you go to, insert
bankrate.com,
news station
like
here, right?
Yeah,
so, so we're trying to give some context and talk about what's going on in the market, and really just kind of educate people that are thinking about buying or selling a home.
Yeah, free value. That's what I love. Free, real value. And then, hey, I'm going to harp on something we talked about over and over again. But again, this is another access to you, your children, your up-and-coming buyer, or anybody in your family, friends, in your network. Hey, how to get the best rate. How do I get the best rate? Because sometimes you're going to talk to lender A, B, C, and D, and it's going to go down the road. You're going to get different rates. Why? How does that happen? I love how you break this down in this 10-page free document. Again, the link to this will be in our YouTube channel at What's Your One More with the number one. Subscribe. You get this for free. Daniel, resources, time, energy, effort put into this. Thank you for doing this, but talk a little bit about this and why this is uniformity at any lender you go to.
Yeah, I mean, I think for most people, if you ask them the secrets to get the best mortgage rate, it would probably be call as many lenders as possible and see who's going to give you the lowest rate. And maybe there's
that's the secret of how to waste your time.
And maybe there's some validity to that. Yeah. But the purpose of this guide is to show you, here's the components that go into determining your interest rate. So if you're somebody that has good credit, but you could have great credit, well, you're going to get a better interest rate. If you, put down X instead of Y, you're going to get a better interest rate. If you're thinking about buying this property type versus this one, how does that impact the interest rate? So really giving context around, yes, we understand that you want the best rate and that maybe you're going to call multiple lenders to achieve that. But if there's something within your qualifications that's going to prevent you from getting the absolute best interest rate from those lenders, then this is the guide that would give you that information and help you figure out, okay, this is what I'm being told right now, but if I were to take this action, that interest rate would improve.
Yeah. And this is a key guide. Guys, I've read through this. I've actually used it in case studies. This is something, you're not going to find this on the internet. I'm sorry, you said earlier you could. You're not going to find this on the internet. And this is insider secret information, because this is what lenders don't want you to know. They don't want you to have the tools to take control. That's what they want to do for you, right? Now you have the control to do this. And again, I want to repeat, this is good at any lender, anytime, any place. Daniel, this is huge. Thank you for doing that for our audience. I know that they're going to find great value in that if they go download it at our YouTube channel at What's Your One More. So, hey, let's wrap up this episode. So, rates have been higher. So naturally, when rates are higher and you have people locked into these lower rates, second mortgages start to become the theme. They start to rise to the surface because you don't want to touch that first mortgage rate, but you want to get to that equity. Second mortgages have really been on the rise. Matter of fact, they have doubled the amount of second mortgages in 1 quarter than they had prior year to that. And now Freddie Mac has kind of stepped in the game, which is kind of, I'm not going to say unprecedented, but I don't think it's been done before, where they're saying, hey, listen, we're going to pilot a second mortgage program. Now, it's got some caveats and it's got some isms, and you're going to talk about that here in a minute. But this is something new. It kind of speaks to the market right now.
Yeah. So according to the Mortgage Bankers Association, 35% of all application activity is refinance applications. And when I read that, I was like, oh, that doesn't seem right.
Surprising. Right.
But then you think, okay, well, these are probably home equity loans, right?
Yeah, 100%.
Because there's not 3.5 out of 10 people at current interest rates that want to refinance to a higher interest rate.
You don't say.
Although those people are out there, and in some situations that can make sense, but
you usually got to have a need or a want for that to happen, right?
Sure.
There's got to be something, a divorce situation, an inheritance situation, a critically bad loss of job situation, something like that has to be the case.
Yeah. But I think that if you look at the people that purchased their homes, a few years or more back, I mean, they've got a lot of equity. Maybe there's things they want to do to the home or just in general. Maybe they need some money to get rid of some other debt, and they're looking towards home equity loans of some kind to be able to be an option for that, right? And that's a space that's been owned by private lenders, right? Banks, credit unions are big in that space.
Right.
There's some that have popped up. There's online platforms now for stuff like that, but it's been private money historically. And I think a couple of weeks ago, June 21st, the Federal Housing Finance Agency Authority said that they're going to allow Freddie Mac to pilot a program to enter the second mortgage space. And there's going to probably be some restrictions on that private lenders are not as restrictive. But I would anticipate that the terms on that will probably be fairly favorable in comparison to maybe what you could find
in the private second market. Yeah,
from a private lender somewhere.
And just for our audience, it's not uncommon that Freddie Mac would test something before Fannie Mae, and Fannie Mae would test something before Freddie Mac. This is very common in almost every guideline or everything we ever see in our industry. So I want to keep that in mind, that this is usually a test pilot for one agency before the next agency takes over.
Well, and Freddie Mac may want some market share. Fannie Mae historically dominates that space, even though they're both government-sponsored entities, right? Freddie Mac generally, volume-wise, is far behind what Fannie Mae has.
Distant second.
But what I think is interesting is Fannie Mae and Freddie Mac were created and as an affordable housing outlet, right? And then fast forward to now, I'd say probably 90+% of conventional mortgages are sold to Fannie Mae because banks and mortgage companies like the idea of passing that risk on to somebody else and then having more of their own capital to be able to lend.
Sure.
Or if you're exclusively a mortgage bank, you're just passing the risk off and freeing up your credit line to do more mortgages. But what I think is interesting is if this is successful, how does that change the landscape of private options for home equity loans, right? Does that mean that they're going to be more restrictive, or now you're going to have a rush of companies that were historically doing these loans themselves, doing them and trying to sell as many of them as possible to the agencies, right? Just kind of one of those things that we don't know yet, but I'd be curious to see how that changes the landscape of what home equity loans look like if this is something that really takes off.
Yeah, when I hear this, the first thing I think someone's going to ask is, well, was there a loan limit? Are there terms, there are condition limits? Like, what does this look like? I mean, have we heard any details on the loan limit?
The loan limit was, I think, about $78,000.
So $78,000 is going to be the loan limit. And I would imagine it's going to be on the conservative side. It's a test pilot, right? So you got to think about this. It's a roughly just shy 10% of the conventional loan limit. This makes sense to me, right? So it's going to be $78,000, and I'm sure it's going to be a very favorable rate comparison to the private market. Like you said, we don't know yet.
I did a little bit of research. I couldn't find any definitive details on that at this stage.
When does this program go live?
I also could not find any definitive details on that.
Imagine this: we have a government agency rolling something out with no details.
But step one, they've been approved to do it.
Yeah, it's step one. So before you know it, I mean, they're going to be reporting, hundreds of thousands of these being done with a revision down to 2 of them being done. But who knows? We'll see when we get there. But I do like the idea of this. I think it's a nice offer to offset some of the 3.5%, 2% interest rate people that are out there that may not want to make the transition when we get back down to the 5s. And that's what we're going to talk about on the next episode is, when is that going to happen? When are we going to be there? We're going to set some dates. I just made a couple of bets when we walked into this office with people in the lobby that are like, is it going to happen on this time and that time? I hope I win. I hope I'm right. And I hope you tune into the next episode, guys. Daniel, as always, great value. Thanks for being on this episode, my friend. If you like what you're hearing, please tune in to the next episode. If you like what you're hearing, share this episode, right? If you could, take a 5-star review on Apple or Spotify. We'd love to hear from you on those platforms. Lord knows we hear from you on the YouTube one all the time. I appreciate that. Check us out, that channel at What's Your One More with number 1. And guys, we'll be back in the next episode to break down rates, dates, and time when we're going to see those cuts. Tune into the next episode of What's Your One More.
I got one more shot, I'm going to make it. One more chance, I'm going to take it. I meant it when I said it, now it's time for me to do it. I got one life.